Hi guys, welcome to the Thinking Crypto YouTube channel where we cover the news, facts, and sentiments about the crypto market. We also interview many of the folks who are investing in the asset class. I have interviewed CZ, Binance's CEO, Andreas Antonopoulos, and many others. So if you're new here, please hit that subscribe button as well as the thumbs up button. Guys, JPMorgan, they have capitulated. They are now offering banking services to Coinbase and Gemini, and those are their two first crypto exchange clients. This is a complete 180 from what the FUD that we've seen over the past 3 to 4 years. If you've been in this market, even up till 2017, you would have seen the FUD that came out from multiple sources, guys. And I tweeted about it today, right? This is a classic smoke and mirrors move by Jamie Dimon and JPMorgan. Put a narrative out in the public against the asset class while secretly trying to build your own, and I guarantee they have been accumulating. And let me give you some of the timelines here. Jamie Dimon in September 2017 said Bitcoin is a fraud, and 2 months later Bitcoin went to $20,000. Well, some of you lived through that parabolic run-up. I certainly did, made some money. And then in 2018, what did they try to do? Banning, JPMorgan and the other banks, Bank of America, Citigroup, tried to ban cryptocurrency trading using your bank account and credit cards. Like I said, all the while building that JPM coins, guys. So classic smoke and mirrors move. I think it's what's amazing in the time we live in with technology, and that you can go pull up information, it's archived on the internet, is that you can see all these things clearer now. Back in the day when it's just newspaper, you couldn't really say, wait, didn't Jamie Dimon say something back in the day? There was no archive. You saw something on TV, it was gone forever, right? As far as news. So just keep that in mind, guys. And the current digital world that we live in helps keep accountability. And I hope you guys see what's happening here. And, Jamie Dimon is a big time liar, and so are the people at JPMorgan. I remember being at a investment class my wife and I were taking it, like where should we put our money and so forth. This was a few years back, and there was a woman there who was an investment advisor at JPMorgan, and I brought up crypto and Bitcoin and so forth, and she's like, yeah, we're not allowed to touch that. She's saying, there was a company directive that came out and said we cannot invest in crypto as employees. So can you imagine that, guys? They were trying to tell their own employees don't do it, but I'm telling you, they were accumulating, and now look at what's happening. They have capitulated. So its CEO once called Bitcoin a fraud, but now U.S. banking giant JPMorgan Chase has added its first cryptocurrency exchange customers, CoinDesk confirmed. Sources told the Wall Street Journal Tuesday that the bank signed two popular regulated exchanges, Coinbase and Gemini, and the latter founded by Tyler and Cameron Winklevoss. By the way, guys, I am in contact with Cameron Winklevoss to try to get an interview, so hit that subscribe button. The fact that both exchanges are regulated in the US was apparently a factor in the approvals, which still look at a lengthy period of vetting, said the Wall Street Journal. Accounts for the two crypto firms were approved last month, the sources said, and are now in use. Wow, guys, look how times have changed. And, they are in the market, and I tweeted about it here that, let me find the other tweet here, that you got now Paul Tudor Jones just confirmed that he is investing in Bitcoin. JPMorgan within the same week says, hey, we're offering banking services to these cryptocurrency exchanges. We know Fidelity, TD Ameritrade, and the others are already in the market here, guys. Here we go. So I tweeted about it, guys, talking about this, right? You got the New York Stock Exchange parent company, TD Ameritrade, Fidelity, Andreessen Horowitz already in there. And I said, keep an eye on Bank of America. Why? Not only were they one of the banks that tried to stop cryptocurrency trading, but they have been grabbing up crypto patents left and right. They have like the most out of all the banks. They've been filing, and they won a few as well. Like, for example, Bank of America seeks to patent crypto wallet that works like a valet car key. I thought crypto's a scam. I thought it was a fraud. Why is Bank of America trying to grab that up, right? Why are they wasting their time? Bank of America wins patent for storing clients' crypto holdings in enterprise accounts. Do you see what's happening here, guys? Smoke and mirrors. Be thankful and happy you have not fallen for this like the masses, and you're here early buying up in at low prices because the prices will take off. These people are going to buy it up. The banks are coming for the crypto. They're going to provide banking service, and I'm telling you, they have been accumulating. So I hope you see what's happening here. I'm showing you the facts. I'm not making this up. Clear as day right now what is happening in front of our faces and the lies. And now all of a sudden, watch Jamie Dimon come out and be like, oh yeah, I was just kidding, blah blah blah, Bitcoin's great, crypto's great. Watch him come out and say something positive after they've accumulated and got their bags. Man, it's so crazy. It frustrates me, but it's also like, wow. It's like everything we've been talking about and I've been trying to tell you guys for years, it's all coming. The herd is coming in. All of them. Fidelity, JPMorgan, Bank of America. They're all going to be lining up and offering crypto trading and custody services. And you want further proof, guys? Big time article came out today from Forbes. Breaking. Firm with ties to former sheriff of Wall Street, Ben Lawsky, just disclosed a $140 million Bitcoin fund. No one knew about this, guys. Let me give you the details. So this is including regulators like Ben Lawsky, the guy who was enforcing BitLicense. That annoying BitLicense is why a lot of exchanges can't operate in New York. Some of you are asking, when Binance US in New York? Well, they're waiting for the BitLicense. And this is mind-blowing. This is just another example here, guys. So New York Digital Investment Group, NYDIG, today disclosed it has sold nearly $140 million in a previously unknown Bitcoin fund. The New York company, granted a BitLicense from the state in 2018, revealed that the fund, in a Form D filing for exemption to the US SEC, dated today. Wow, no one knew about this. Formerly called the NYDIG Bitcoin Yield Enhancement Fund LP, the fund began selling just a week ago, May 5th. So May 5th, we saw Bitcoin price around 9,000, right? So they sold the news, right? And you can imagine they're going to buy the dips and rinse and repeat. According to documents, described as a pooled investment fund, meaning multiple investors participated in the capital raise, the investment group requested its exemption under Rule 506B of the Regulation D Safe Harbor protections established in 2013. Let's see here. While little is known about the new Yield Enhancement Fund, an earlier NYDIG investment called the Bitcoin Strategy Fund the Bitcoin Strategy Fund was advised by Stone Ridge Asset Management, a $15 billion, sorry, I don't know why this keeps jumping around, a $15 billion advisor with ties to Ben Lawsky, who created the same BitLicense granted to NYDIG and who was formerly served as the co-chair of the New York Governor Andrew Cuomo's Cybersecurity Advisory Board. Ben Lawsky now sits on Ripple's board of advisors. Guys, big money, and it's just a matter of them disclosing it and the information coming out. They have been buying Bitcoin and crypto. This right here is a smoking gun, like, whoa, $140 million investment fund includes ties to Ben Lawsky? Wow. I don't know, where this goes as far as his connection, but he's the one that's known as the Sheriff of Wall Street after issuing $6 billion in fines to financial institutions during his tenure starting in May 2011. In June 2015, Lawsky left his state post and the following month formally launched the Lawsky Group to advise those navigating financial services regulations. So interesting things happening here. And like I said, he sits on Ripple's board of directors. So guys, hold on to your crypto. Obviously not financial investment advice, but I hope you see what is taking place here. These people are buying up. They're going to buy up all as much as they can and then sell it back at a premium to the average Joe once they start marking the hell out of this asset class. I hope you see what's coming. Now, speaking of Ripple, some interesting data here. Their data scientists put together some info And it says here, our data team crunched the numbers, and the evidence shows that users are shifting to XRP for exchange balance transfers to avoid network congestion on Ethereum and Bitcoin. So I'm not surprised by that. I've actually spoken to some people. I remember when the network was getting busy and people were like, yeah, I'm going to move my money with XRP. Not surprised by that. XRP much faster, much cheaper to use, right? That's not to say I'm an XRP maximalist. I hold XRP. I'm bullish on it. I'm bullish on Ethereum and Bitcoin, man. I got Bitcoin and Ethereum in my portfolio. Bitcoin, more of the digital gold store of value. Ethereum, smart contracts, DeFi, right? And XRP, obviously, that ideal bridge currency for cross-border payments. So different use cases. I don't know why people have to be maximalists and fight with everybody on Twitter like they're kids. But, dude, I mean, different use cases, right? I'm bullish on all three, and I diversify to reduce the risk in my portfolio. This is standard investment principles. Finally, guys, big move by IBM here. IBM blockchain to offer decentralized smart contract option. So they're dipping into the smart contract pool here, man. It's like you got Tezos, you got Ethereum. Yesterday I reported about Flare bringing smart contract technology to XRP. So who's gonna win the smart contract battle, guys? Because you got EOS, you got Cardano. We shall see. But IBM coming into this is a big player with a lot of money, right? So IBM is upgrading its enterprise blockchain solution to provide clients with a new decentralized governance option that will allow transaction parties to propose and amend smart contract parameters. So let's see where this goes. It looks like they're going to use Hyperledger. Let me see here. On the existing Hyperledger Fabric 1.0, smart contract governance is largely centralized. So let's see what type of adoption they get. I'm still bullish as hell on Ethereum as the go-to smart contract platform. With all the building that's happening, and I know Ethereum 2.0 is coming. Vitalik says this year. Let's hope that happens, and moving to proof of stake. So interesting year ahead, and I personally believe that once Ethereum goes to proof of stake, there's going to be a supply and demand economics tie in there, because a lot of Ether is going to go into staking. So there's going to be a cut in the supply, and the demand will obviously continue to rise as the asset class grows. And these people like JPMorgan and Bank of America keep buying up. And we could see that help spark a bull run. I don't know. Let's see what happens, right? I that's my thought process behind it, but I could be wrong, and we'll have to wait and see, because none of us can predict the future, of course. Guys, what do you think about this news here? JPMorgan, Jamie Dimon, big liars, scammers. So classic smoke and mirrors move here. What do you think about it? Leave your thoughts and comments below. Thumbs up if you like this video. Please subscribe if you haven't already, and I'll talk to you all later.